From the streaming wars to the shopping wars, Netflix announcing it is launching its own online store that is set to sell exclusive merchandise for its original content, shows like Stranger Things and The Witcher. It will also feature limited edition apparel and lifestyle products, even some funky clocks. Let's get to our traders for the floor show, Tom Hayes and John Gagliardi. Thank you, gentlemen, both. Tom, let me begin with you. Is this a good idea for Netflix? I mean, honestly, is merchandise going to make much difference going up against rivals like Disney and HBO Max?
Well, Ashley, I don't think the merchandise will make a big difference, but I do think Netflix is well positioned. It's been going sideways for the last year. We think it's ready to resume its uptrend. You can buy Netflix today in June of 2021 for just 15% more than June of 2018. The difference is when you look at next year's estimates, cash flow per share and revenue per share is expected to double. So 100% more business for 15% more cost. That's my kind of deal. So why has it been down? It's been under pressure because COVID pulled forward a lot of demand. They added 16 million subscriptions during the pandemic quarter last year, only added 4 million the same quarter this year. We think that's going to change in the back half of the year. They have a lot of new original content coming online. My favorite show's coming back for season 4, which is Ozark. We're excited about that. And they have a they have a moat on the international business with big growth in Latin America, Europe, emerging markets, and Asia Pacific, plus a $5 billion buyback to boot. So for those reasons, we like Netflix moving forward, and it has nothing to do with the new store or the new T-shirts.
How great is Jason Bateman and Laura Linney? Anyway, we could talk about that for the rest of the day. John, the best. John, what are your top streaming picks? Who do you like?
I can tell you first who I don't like. I don't like stocks that go down. And Viacom and Discovery got knocked out, and they are asleep on the canvas. They cannot seem to get themselves back up. And as we already were told, Netflix is going sideways for a year. Since June of last year, you didn't make any money on Netflix, so I'm neutral on it because it's neutral on me. But the one that seems to be persistent is Disney. Disney is the king of content, and they just don't want to seem to stop going up. And that's my favorite thing about stocks. I only like the ones going up.
Well, that's very good advice. Let me get back to you, Tom, and talk about the market, the broader picture here. This is a market this week that took, the inflation and the consumer price index in its stride. The 10-year yield is not perhaps signaling massive inflation. I mean, is the only way up from here?
Yeah, well, as it relates to treasuries, Ashley, this was a sell the rumor, buy the news with the CPI print. And in this type of environment that we're in with rates actually lowering now, those sectors that were hit by yields rising earlier in the year, like tech, utilities, staples, and healthcare, with yields now stabilizing and even going lower, I think they're going to be the ones to outperform during the summer doldrums. That's historically been the case. If you look over the last 20 years, the average seasonality for the tech sector, which Netflix is included in, it goes sideways for the first 6 months of the year. It inflects in June and July and goes straight up to the end of the year. So that just furthers the case for the Netflix and for the FANG starting to get a bid after a year-long consolidation.
All right, let's get back to John. John, you only like stocks that go up. I hear you. Where are you putting your money right now? Where are you telling investors to put their money?
I'm a big chart guy, and it was shocking that I've been talking about things like the treasuries. Treasuries look like a fantastic, if you put up a 10-year chart of treasuries, prices up, yields down. And this was an environment where everyone believed 100% yields could only go up from here. And that doesn't seem to be the case. And same thing with gold. Gold is starting to turn. So we're in this strange world of lower interest rates, higher gold. It's bizarre, but sometimes these things do correlate.
They do. It's opposite world, basically. It's tough for investors to figure it all out. But thank you, gentlemen, both for helping us. Tom Hayes, John Gagliardi, thank you both for joining us on this Friday. Thank you. All right, from Netflix's online shopping foray.